Welcome to the Rate Update with Dan Frio. My name is Dan Frio, and today we're going to talk about the existing home sales. That's the only data out today. But I also want to dive into the what the Fed is saying about inflation. We have conflicting views there as well. But if you're new to this channel, please don't forget to subscribe down below. Hit the bell every time we post a video and give us a thumbs up if you like the videos. My job here is, our goal here is to educate you and inform you everything real estate, especially when it comes to your financial needs. So let's get on to today's news. So this morning we just had the existing home sales and they came in a little short than expected. I'll show you that here in a second. It was just posted minutes ago. So you're getting news flash basically on that thing. And then in another area we're going to talk about, and I'm going to show you some details on, is the Federal Reserve. There's multiple members of the Federal Reserve, and they're all coming out, giving their opinions. And their opinions, believe it or not, weigh a lot on the markets. So when you see one day where the markets just plummet, it might be just because one of the Federal Reserve members came out and said something. Like yesterday, Bollinger just came out and said, I wouldn't take a 75 basis point increase in the federal funds rate off the table. And everybody's like, are you kidding me? So let's go over all this in the news. So let's get to it. The first thing we want to talk about is the economic calendar. You can see that today. Right here, the only news out was today is existing home sales, and I waited to do this video so you can get this hot off the presses. So the previous month's reading, we had 5.9 million homes sell. The expectations for last month was 5.8, and it came in at 5.77, just a little shy, but nothing that would throw the charts off. Crude and oil inventory is coming out shortly. Why do we watch that? Is because why? Well, the Federal Reserve has two mandates. It's full employment, which we're going to have down through here, and cost or inflation, keeping a lid on inflation. And oil is a huge part of the energy piece of inflation. Okay, so that being that, another area, if you're new to the channel, I have a newsletter that goes out every morning. All you need to do is go down below in the description. There's a lot of stuff down there, but you can actually apply or subscribe to my newsletter to get this every morning. So if you're a consumer out there, a realtor out there, or a mortgage advisor, I'd highly suggest you sign up for this. The next thing is, here's what I was talking about when it comes to the Federal Reserve talking. Now, this person is the Federal Reserve. He sits on the board at the Atlanta Fed. Okay, so there's Federal Reserves throughout the country, and there's members of that, and they have voting rights. Some have voting rights, some don't. But he's coming out saying, I think what we're doing right now is okay, because let's see what happens with the economy as it moves. Let's not overreact. So that's some soothing information that we got so far today. If you guys don't know, I feel like this is a commercial today. I have a podcast, and it's on, it's all over the place. But here it is. There hasn't been an update recently, but if you want to educate yourself on anything, again, real estate, focused on financials, please go here. I have, this is my radio show. I have congressmen on there. This is Alan Skillicorn from Illinois. I have Dean Hedeker. He's a top 10 Forbes investor. Tom Marabelli, John Anthony. So there's a whole bunch of special guests on here. So check out my podcast. They're a little bit aged, but this data, a lot of the data still is relevant today. So let's get over to some of the other news that we're going to talk about, and you hear on the headlines every day, is the yield curve. What's going on with the yield curve? Because the yield curve is going to signal if we're going to have a recession or not. Well, it's starting to come back in line a little bit. You can see the yield curve should go kind of like this, but we have a little anomaly right through here. So that's where we're trying to, they're trying to tighten down the long end of the curve. This is a live ticker. If you ever want it on CNBC, you can go down through here. And if you look through here, the yield curve is pretty stable, or it's in line. If you go chronologically up, you can see every number is higher than the next. So that's where you want to be. Is this the end all beat all? Absolutely not. So now with all this data, what's going on with mortgage rates? Well, we start that avenue off by what's going on with the MBS market. Because why? This MBS market is the biggest component of your mortgage rate, the yield on this bond. So we're looking at the Fannie, the 30-year MBS 4.0, and I can show you my live feed, but I mean, I think I'm confusing more people than it's worth. So right now we have the MBS is up 23. So what does that mean? Let me explain it real quick. When the MBS market is up, like in this case, It's driving up the price of the bond, mortgage-backed bond, driving down the yields. It's a good day so far. So 23, I'll take it because yesterday was pretty bad. All right. So this is saying, well, we're having a little bit of recovery in the market. You can think of this as a stock, your stock price is getting a little bit better. The trend right now is positive. That can turn on a dime, folks. Okay, so let's see where mortgage rates ended last night and started the morning. We go across here and I'll go through it real quick because I went through a lot of other data this morning. So if you're new to the channel, please, I'll just go through the first one with my lingo, explain it, and then we'll go across. So I discussed this cell right here, the 30-year fixed. It is up 10 basis points, meaning it's up 0.1 from the day before, coming in at 5.35. These are not my rates, just so I let you know. These are the national averages put together by Mortgage News Daily. Okay, so here's what the rate is, 5.35. It cost you, though. The little thing down here, what a lot of people, I try to advise people on, how much is that rate costing you? So don't get completely wowed over the rate. Okay, there's a cost involved to get this rate. So we're teetering on 5.5 if you take that cost out. Okay, so that's how I talk about this. So let's go across and I'll say in my lingo. We got the 15-year fix coming in up 11 basis points to 4.65, also comes in with 40.4 in points. Then we have the government loans, which is FHA, VA, and USDA. I lump those in as one because their rates are normally pretty similar. They're coming in up 8 basis points to 4.87, no points there. The 30-year jumbo is coming in at 4.44, up 4 basis points, no points there as well. And we have the 5/1 ARM coming in at 4.09, up 6 basis points, not as much as the others, but they're sneaking in that half a point in there. So you got to be careful because every day when they do this, I don't know why they're doing this. They put in there if there's points, if there's not points. Some days this is 0, some days it's 0.4, some days it's nothing. So be careful of that. So that's my report for today. My name is Dan Frio. I do the rate update every day. If you're in need of a mortgage, if you're looking for an extended lock because you're building, call us. If you need a reverse mortgage, a debt consolidation, a home renovation, anything in regards to a mortgage, or if you're looking to get pre-qualified to buy a house, we can do that within minutes. So how you do that is just go to therateupdate.com. Check us out there. We have our phone number there, how you can apply online and even schedule meetings with us. So God bless, guys. Thanks for watching. I'll be back later today with an update midday to show you where the markets are going. And then also, I want to prep you. We have our Thirsty Thursday coming in this week. So don't forget that at 7 p.m. It is a YouTube Live. Thanks again, guys. I will see you in a little bit with my midday update.